Now, let's talk about all of this with Manish Madhvani. He's co-founder and managing partner at GP Bullhound. Manish has executed M&A and capital raising transactions for some 25 years involving big names including Spotify, WPP, and News Corp. So Manish, great to speak to you on the show today. Is it getting easier or harder to actually raise funds for technology companies?
I'd say it's definitely harder than last year, but I think you've got to take a step back and put it into context. Last year was record years by all accounts, and it's almost looking beyond that. How are we faring when you look back to 2019, 2018? And what you actually see is we're actually returning to those levels, and the good companies are raising. We just closed a round of 500 million for a European company, which was unheard of, but now is becoming quite common. But I'd say the bar has been raised considerably over the last 6 months.
Manish, it's interesting. Yeah, you're talking about the importance of looking at companies that are well run and that funding continues to flow. I just think more broadly in terms of the environment that we're in of higher rates, recession concerns, of course, record inflation. I mean, just broadly across the sector, how much pain are you seeing? Are you seeing failures ticking up across this sector?
Yeah, I think there's kind of we hold this event, which obviously Bloomberg have participated in, called Investor Allstars, which brings together all of the investors. So we have around 1,000 people coming from across Europe, all of the big funds to the seed funds. And you get a really good indication of the mood, the confidence, and what's happening across the whole ecosystem. And I'd say the experienced funds, in a lot of industries, people are shell-shocked at the moment and kind of looking at the short-term pain. And there's obviously some really difficult clouds on the horizon. I think within tech, though, the smart investors and the experienced investors are taking a long-term view. So is there fundamental demand for these companies? What's been happening on the consumer side? And if we take an extended view, what's the right strategy? And I'd say that's the confidence that I'm feeling at the moment. And you're seeing this with some of the rounds that are being announced. There's definitely a flight to quality. I think many of the companies with poorer unit economics, they're going to have to be creative. They're going to have to fold, or they're going to have to combine. We saw this in previous recessions, kind of in the food delivery market, which everyone's talking about. The unit economics only really work at massive scales. So the smart companies will then be consolidating and hitting that mass that will then allow them to survive.
So, Manish, how many companies are you actually expecting to go under? I don't know whether it's zombie companies or just companies that are nimble and adaptable. I mean, we're hearing, and again, these are very early reports, but it could be as much as 20% of the smaller companies that actually don't survive this business cycle.
Yeah, and I think that's probably right. I mean, if you look at the long,
it's a lot, man.
It's a lot, but if you look at the long-term stats, and I think this is one of the things that Europe has to embrace. In America, failure is kind of a strength. So when we look at the stats of all the European unicorns, or those companies that hit $1 billion, 70% of those founders have had 1 or 2 failures. They've then learned so much from that. So failure is, if the unit economics aren't working, if the business doesn't work, you've got to have the confidence and the guts as a founder to fold that or pivot, change the business model. And that's a necessary part of kind of the growing of this ecosystem.
Manish, you talked about the Investor Allstars event, and I have to say it is refreshing to go and attend. I was there last year. The optimism is really refreshing, particularly in the current environment. What are you looking at in terms of the trends, the emerging trends? Where should investors be looking for opportunities, whether it's in healthcare or fintech? What is really kind of standing out to you at this point?
I'd say we're seeing a huge amount of innovation in digital health, and there's probably been too much funding in that area, but it's created this kind of bedrock of new apps, new startups that are getting access to so much more data than we've ever had in the past. And this is going to cause some breakthrough treatments, breakthrough people being able to look after their mental health, their physical health. And it's because you're able to take these tens of millions of data points now and see what affects you, what affects your training, what affects your sleep. And I think this is probably one of the most fundamental shifts we're going to see. Amazon have just recently bought into digital health, and they're going to obviously do what Amazon does, which is really try and improve the consumer service and take that to the next level. The other areas that we're spending a lot of time in are companies that monitor kind of CSR and ESG responsibilities, so making sure corporates are acting in an ethical and moral way. This has come back onto the agenda, but there's no real infrastructure that tracks that. Now there's this whole breed of startups and growth companies that are making companies accountable and can actually track if a company and all of its thousands of suppliers are behaving in an ethical way. EcoVadis is one of those companies that we're seeing is kind of changing that landscape. And then obviously security, cybersecurity is top of mind for everyone at the moment, given the political situation.
Yeah, I mean, cybersecurity seems like a total nightmare, and I don't know whether it's shifting, given you know the pressures that we're seeing in the world economy, whether mental health, a lot of sustainability things, people say they're interested and will do it, but actually companies stop investing in that because they worry about the cyber threats and kind of the economy collapsing.
Yeah, I think there is a danger of that, and there's a lot in the headlines at the moment that a lot of the health startups that received a lot of funding are not getting their second and third rounds. I think that's always true when there's such an influx, because that sector received kind of 3 or 4x the amount of funding it normally did in the last year. There will have to be some companies that are not going to succeed. But then you see that it kind of cycles through this IP, this talent. So in the last recession, the Facebooks, the FANG companies, acquired in 2 years 150 startups. And that brought in a huge amount of IP, lots of talent, and then they turned that into new products. So it's kind of this recycling and Darwin effect that will kick in.
Manish, we have the Spotifys, the Revoluts, the Klarnas here in Europe, some of them facing their own challenges. Where are we on the ability to scale to the levels that we see in San Francisco and more broadly across the US?
It's a good question. I think this is our next mission at GP Bullhound. We've kind of been on this real push to drive companies to this billion-dollar level. We're now achieving that on a regular basis in Europe. So there's 283 companies that have hit that mark as of May. What we're seeing now is there's kind of a bit of a ceiling for when we hit the $5 and $10 billion mark. So Spotify, Adyen have broken through, Revolut. But what we're seeing is to do that now, we really need to get the public markets working in Europe. So I'd say growth rounds used to be a missing part in Europe. That's fixed now. The good companies are easily able to raise kind of 200 to 500 million from the US, from Europe, from crossover funds. What we are seeing, though, in Europe is when our companies are going public onto the stock markets, they're not getting the liquidity, they're not getting the analyst coverage that you get in the US. And it reminds me of what was happening on the growth side in Europe kind of 5 years ago. We now need to fix that. We need to get the analysts educated. We need to get liquidity into the market. And there's quite a few initiatives that are being pushed to do this. And that's the only way we're going to start creating these companies of scale on a regular basis. I'd say the ambition levels from the entrepreneur and the skill set is there now, but we need the capital to kind of drive that, and that allows a lot of M&A.
Thank you so much for joining us, Manish. He is co-founder of GP Bullhound, Manish Madhvani. Now,